Hello and welcome to the Sand to Pearls market commentary for the market week ending September 27th, 2013. Market breadth. With this past week's market advance, our bull-bear point and figure ratio fell from 1.89 to 1.82, maintaining its bullish territory. The total count of securities in bullish or bearish patterns decreased 3% to 2,055. The count of bearish stocks decreased fractionally, while the count of stocks in bullish patterns decreased 4%. The Sand to Pearls PNF Market Breadth Summary Chart shows us a market now 4 consecutive weeks in bullish territory. Paid subscribers have access to the Excel data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking on Membership, clicking Sign Up. For those who are interested, a free 2-week trial subscription is available. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 41 points for the 8th rise in 18 weeks. At a positive 379.76 points, it continues above the November 2011 top, but below the November 2010 top, the January 2011 top, the February 2012 top, the September 2012 top, the March 2013 top, the May 2013 top, the July 2013 top, and above the March 2011 bottom, the June 2011 bottom, the August 2011 bottom, the December 2011 bottom, the May 2012 bottom, and the November 2012 bottom. Market Gauge Volume Analysis. In this week's volume analysis, the Russell 2000 ended in neither accumulation nor distribution mode. In the last 2 weeks, it had 4 accumulation days and 2 distribution days. Of the other indexes, both the S&P 500 deposit receipts and the Diamonds Trust ended in neither accumulation nor distribution mode. Accumulation days are counted when the index closes up on higher volume than the prior day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week also, the Russell 2000 ended in neither accumulation nor distribution mode. The CCI 20 continues its 3rd week in a Woody's uptrend and remains outside the plus or minus 50 range for a valid zero-line reject signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 33 weeks ago, while the daily CCI 20 began a Woody's uptrend 2 weeks ago. The CCI 20 weekly continues above plus 100. We await a return to the plus or minus 50 range for a valid zero-line reject entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and all of the bottom 5 are negative. Bullish S&P retail remains in the top 5. Gold and silver remains in the bottom 5. Comp Tech has entered the top 5. Bearish, banks has entered the bottom 5. Oil has entered the top 5. Disk drives continues in the bottom 5. Focus this week from zerohedge.com. The government shutdown looms. A Q&A on what happens next and who stays at home. Some quotes from the article. With the government's October 1st shutdown, temporary of course, now seemingly inevitable, and more importantly, with the peak debt ceiling negotiations due in just about a week, after which point the Treasury will run out of money, many wonder what comes next. A partial shutdown that lasts no more than a few days wouldn't likely nick the economy much. But if the shutdown were to persist for 2 weeks or more, the economy would likely begin to slow, economists say. Q. What if Congress can't agree to raise the cap in time? A. It could be disastrous. No longer authorized to borrow, the government would have to pay its bills only out of the revenue it gets from taxes and fees. This would force the government to immediately slash spending by 32%, the Bipartisan Policy Center estimates. Most analysts think the government would delay paying each day's bills until it had accumulated enough money to pay them all. Even worse, the government could miss interest payments on treasuries, triggering a first-ever default by the U.S. government. U.S. treasuries are held by banks, governments, and individuals worldwide. Ultimately, a prolonged default could lead to a global financial crisis. The government actually reached its borrowing limit back in May. Since then, the Treasury has taken a variety of measures to avoid exceeding it. But the cash generated by those measures will run out sometime between October 22nd and October 31st, the Nonpartisan Congressional Budget Office estimates. If you are a praying person, this might be a good time to pray. If you are a prepper, this is certainly a good time to prep, but we do hope for the best while acknowledging reality. We also hope that you have a great week coming up. We thank you for joining us for this week's market commentary and hope that you're having a wonderful weekend and wish you happy trading.